Hey guys, welcome back. In today's video, we are talking about the AMC sale, the checkmate move, squeezing the stock, and many more in this video. So obviously we have to talk about the elephant in the room. What we have seen is AMC announced the completed sale of 95 million shares of stock. Now, bear in mind, they did the same thing on January 25th of 2021, and the stock kept squeezing until brokerages pulled the buy button on January 28th. So we have actually seen this in the past before, and in the circumstances similar to what we are seeing right now. Firstly, what we have saw prior to this has obviously AMC being on a upward trajectory, and this was due to many factors. One of the biggest factors is just how well we're doing and how much attention AMC has gained over the last few weeks. And so amidst this, they have done something which they've done in the past before, and we're obviously here to address this. But one of the things I do want to mention is how this has been extremely beneficial for us in the past before, and why this still obviously remains the same. Because firstly, even if we aren't looking at the same move happening, so prior to this in 2021 when they did the same thing and then the stock obviously shot up, even if we don't see this happening, one of the biggest things for AMC is that we are still improving fundamentally. And one of the things we've done with this and the recent deals has obviously been clearing the debt note. And so what we're looking at right now is just how AMC is in a very straight path, a very clear path of just improving the fundamentals. And so we have to realize and understand just how important this is for us, what it means ongoing for the future of AMC. And one of the biggest things we've talked about for AMC has been some of the strategies that can be played out once the debts have been paid off. We talked about buybacks of shares. We talked about issuing out dividends. These are all important things that AMC will have the ability to do once we've paid out these debt notes. And so when we talk about the short-term and the long-term effect, what I see is very positive things. Now, this doesn't mean it's obviously all just good things. There is, of course, the negatives. One of the things that we are seeing is that we were down 24% for the day, but it doesn't take away from the fact we're still above $2. We're still looking at how well AMC is doing. And if you want to take a look at the long understanding of what's going on, and I really suggest people to really understand why this is important and why this is very big for the future, is that firstly, we're paying off a chunk of near-term debt maturity pressure. Now, paying it off early avoids potential refinancing risk in 2027 if rates are higher or markets are tighter. Lower interest expense going forward improves cash flow and profitability metrics. And already we have to understand this is very important, because firstly, what we are seeing is clearing near-term and short-term pressure. And this is a very important thing, because if you don't want to see AMC do more things like this in the future, then the best thing for them is to do this now. And what I mean by this, and kind of a understanding, is that AMC is able to do one offering now to avoid 3, 4, 5 potential offerings in the future. And I strongly believe in that ratio. It isn't to say that we should do as much offering right now as possible, because obviously it would be better for AMC price to go up even higher and then do an offering at an even higher price. But by reducing the short-term pressure, by doing some of the strategies that they have been implemented, it really reduces the future possibilities of offering. And so I truly do believe that if we're able to do an offering now, it gets rid of 3 future offerings that potentially could have happened. And I'd rather get one offering now than 3 future offerings in the future. And of course, when we talk about lower interest expense, this is already very important. Now, on top of this, we can talk about how this is going to encourage even more investors. Yes, a dilution is very bad in the short term, and I'm not saying that. I'm not saying that it's extremely good, that AMC should have actually instead seen today go up 24%. But what I am saying is that AMC, by doing some of these short-term moves, whilst it's very painful short-term, it does a lot of wonders. When we see a stronger balance sheet, when we see how well AMC will do, again, this goes on to lower debt, this goes on to less capital interest expense paid. All of these things will boost up AMC's financial sheet. And when you boost up AMC financial sheet, people will look at AMC as an even better investment. So right now, because of the offering, people may look at AMC as a bad investment. Whilst I still disagree to that, it is the fact that some people will believe that. But fast forward 3 months, because AMC did this, because AMC has improved their fundamentals so drastically, 3 months later, people are going to forget about this offering. And what they will see is just how AMC is a very, very good company. And so this is why I've said about how having some short-term painful things is extremely good for us, because in the long term, it will pay out well. And again, with the extra money that we're raising, with the extra money that we are saving, AMC is then obviously able to position themselves at a better place. One of the biggest things we talked about has been the fact that we don't care about the box office anymore. Not to say that it's not important, but it's because we know that the box office is doing well. What we should be looking at right now the most is how AMC is able to capture even more market share than the existing ones that they have. Now, the ability to do this would be to enhance the movie going experience, whether that's to have more large format screens, whether that's to have premium seating, sound upgrades, or anything else. And these all go down and boils down to having the money. So the biggest thing right now is for AMC to get market share. For AMC to get market share, they need to improve their theaters. For them to improve their theaters, they need money. And it just goes down to what we've said with how by having the extra cash, by saving the extra cash from these interest expenses, we are able to then see AMC divert that into other things to really make AMC an even better place than it already is right now, to have even more market share than they have. And so in the future, in 3 months' time, in 6 months' time, when you see AMC double their market share, increase their market share by 50%, you're not going to care about the offering they did today, 6 months ago. You're going to care about how well they've managed to put themselves in a position to have 30% of the market share of the entire industry, to have 40% of the market share of the entire industry. That's what we'll care about. And a lot of people realize this because the fact that we are seeing a successful capital raise and how quickly it is, it goes on to talk about how people are very confident in AMC and that they actually want AMC shares. And so when we eliminate that, the short thesis is gone. Don't get encouraged because the stock price has dropped, because just like I've said, ultimately, if we're able to see AMC do this, if we're able to see AMC play this out well, you're not going to care about the offering they did today, because AMC in the future will be worth a lot more. And you can see, sure, we diluted, sucks as usual, but that doesn't negate AMC having its best weekend of the year. Seems like the news was deleted from the internet. And so once again, we need to realize the fact that people are willing to actually buy AMC shares and use it to pay off debt, it goes on to talk about it's because they've realized what AMC has been doing. And so a lot of people have been shocked by today's dilution news. And again, it is shocking, of course, because it was kind of out of nowhere, but it doesn't take away from the fact that we've already seen how AMC made a new record attendance. And that is something that we need to understand with how important this is. And if we see more news like this in the future, where AMC is getting even bigger and higher record attendances, then again, the money that they will raise from that, the money that they will make from that will be far greater than the value that we lost today. And that's something that I truly do believe. And also we have to realize, brutal dilution, sure, but AMC CEO doesn't buy 250 shares for fun either. And so one of the biggest takeaway is that Adam Aron has been buying into shares of AMC. This is something we've seen, and perhaps we'll see him buy into even more shares. But the fact that he was already willing to buy into 250,000, and bear in mind, he obviously knows what's happening for AMC. The fact he's willing to do this is just a sign that he knows that this dilution isn't a bad thing. He knows that this dilution will lead AMC to a far greater future, and that's why he was willing to do this. And I definitely do believe that he has a lot of plans for what's going on, and with the cash to use as well, with the kind of the investments to make, the upgrades to do. And so this is something that I am obviously excited about. And also we have to remember that ultimately liquidity, paying down debt, this is how we bring a company back. And this is what we've done in the past before. So it's not shocking that we're seeing this happen again. But also something that is very interesting, I'm curious to hear people's thoughts about this, which is recently we talked about how Roy and Kitty's brother, he mentioned in the X space about getting the right people to be involved. And then all of a sudden, AMC dropped on news of institutional investors buying 95 million shares in a direct offering. So the links is that if Kevin knew, which means Keith knew, which means the institutional investors are probably GameStop and or RC Ventures, who now own over 10% of AMC's common stock. So this is obviously all a big thing, and nothing of yet has been confirmed as such. So this isn't me saying that this is what's happening. But the very fact we've seen the timing on this, and we've seen recently the return of Roaring Kitty as well, it does feel like everything is kind of linking in together. And so if we are seeing the right people to be involved in AMC now, and that their sole objective is to bring AMC to squeeze, then once again, this offering is something that is actually very good, because if it gets the right people to bring in the squeeze, you're not going to care about the 22% drop that has happened today, because when AMC squeezes, it's going up 22,000%. So if it was down to me and you gave me the option of let's drop AMC by 22% today, but we are then able to bring AMC up 22,000%, am I going to take that deal? Of course I am. Now, again, nothing of the sort has been confirmed, but if it is something close to this, it obviously is very important, because another reason for why I think that this is very positive is that typically, and you can see here, when these institutional investors would short the shit out of AMC if they knew an offering was going to happen. And evidently, you would benefit from this. You would do this because you see that AMC went down 22% or 24%. You would try and short. However, the short interest has actually done nothing but go down as opposed to what was being reported. And so if they're not shorting AMC, at least in the open, and we talked about this, the reported short interest is just something that we see in the open. What goes on beyond in the dark or the synthetic, that's obviously a different story. But if they're not openly shorting AMC, it would mean that these guys who've bought AMC shares aren't here to benefit from the downfall of AMC. They're here to try and bring as much AMC shares as possible without having as much negative impact as possible. And so it's one another thing why I think that the people who are involved with the AMC recently, the people who are involved through these dilution, is actually here for a very long run of AMC, and of course a very good run of AMC. And just like we've seen, is that this offering can be completed within 2 days according to the filing. Again, the fact that this is so rapid, the fact that this is so positive, is just something I said that yes, it's short-term pain, but there have been so many positive signs off of this. And if we go back to 2021, we've seen this happen before, and you guys can take a look at it here. And so once again, there is so many indications right now that is just showing that this is bringing more good than bad. And this is why I'm not bothered about this, but it is something that we obviously need to address and understand. And another big thing is that despite what we've seen, is that AMC is still at $2, right? Just a few months ago, we were at 0.93. Now we are still at $2 whilst having the ability to raise $200 million. And so we have to really understand and really take things for granted and realize the position that we're in right now. Not to mention is that this is going to be done, and we're going to be seeing AMC back on that trajectory again and see the price go up even higher. And when we talk about the new movies that are coming out, when we talk about the record-breaking box office, when we talk about how AMC is going to do well fundamentally, all of these things are still going to stay true. Just because AMC did the offering, it doesn't suddenly mean that no one's going to go watch movies. It doesn't suddenly mean that no one's going to make movies, right? Everything that's been going on for AMC, the positive things that have been attracting investors, that's still going to happen. That hasn't been removed just because AMC did the offering. And this is what I think people are forgetting to really realize. When you take a look at the technicals, we were still doing very well. We did see a supply zone, and it kind of met in at the similar prices. We're still seeing kind of the positive technicals. And so for me, there's nothing too much to be worried about. The people who are worrying is actually companies like Robinhood, the brokers, where they're sending warnings. I'm not sure if everyone got this, but at least I've seen this, where it's saying AMC is volatile right now. And the fact that they are stressing out about AMC, it really goes on to talk about how they are still stuck in this. And we've seen in the past before how the value at risk for Robinhood with the AMC shares were more than 50%. And it was going to collapse their whole margin. So the fact that they're doing this right now, it just feels like nothing has changed, and that is still the same situation over and over again. And AMC, like we said, technicals is still traded above 200 MA. The golden cross is still in play if there's someone who looks at that. Just like I said, that everything is still remains the same for AMC. The only thing difference is right now is that we have 200 million more cash that we're able to use. Now, what we also see is how GameStop will release additional materials regarding its proposed acquisition of eBay this week. And I think that this is going to be very, very good because we are seeing more and more things. And if you look at the clues being set, it looks like eBay is well positioned for the next big shift. And that's why GameStop will acquire eBay. Again, nothing of yet has been confirmed. It has been a very long going thing, but an acquisition of this side should be, long going. But we're still seeing very, very positive news on this. And then finally, what we're seeing is Citadel opening up a new account at DTCC, and it just feels like that the liquidity issue that we've been talking about is still ongoing. And it just looks like right now we're seeing clues on what they're trying to hope for. Now, as always, not to have financial advice, and I'll catch you guys next time.